the largest gainer in the S&P 500 by far on that day, while the Dow and the S&P were getting their ass handed to them. So that put gold stocks on the radar, I think, for the general investor. And these funds now, if once Q2 comes out and we have another blowout quarter, and you're going to, I mean, like I said, the gold price is averaged over $2,300 here in Q2. Unless, gold falls out of bed for some reason in the next month, it looks like it's going to average over 2,300 in Q2.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network. Now, more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, gold has been blazing hot. Same with silver. Today, silver is over $32 an ounce. We're just a couple more days left to go in May. And hey, will the junior miners shortly follow suit? That's the question. Our good friend David Erfle is with us now. And of course, you know his site very well, juniorminerjunkie.com. And if you got a question for David, myself, shoot me an email, kl@kerrylutz.com. David, hey, it's great to connect with you. It's been a while. A lot's been going on here.
Hey, Kerry, great to see you.
You too, man. So price of gold, 2,400. Right now they're attacking it today. It's at 2330 something, whatever. It doesn't really matter at this point. We had the close over 2,000. It's never looked back. Now we're looking at a potential monthly close for silver of 32 or higher.
Yeah, it's interesting. Once we had that 13-year cup and handle breakout in the gold price above that 2,100 level, which had been resistance for 13 years, the gold price has taken off like a scalded cat. Once we had that technical confirmation, when we had a monthly close above 2,100 at the end of March, and it was also the end of the first quarter. And now silver is appearing to do the same thing. At $30 was resistance for quite a long time. And it looks like we're going to have a monthly close above 30 this Friday, which would be a technical confirmation of a breakout in silver. And all this was foretold by both the miners and silver outperforming the gold price over the past few months. And what's more important is the SILJ, which is the silver junior ETF, that's been outperforming not only the miners, the gold miners, but it's also been outperforming gold. So we have the silver junior ETF outperforming the miners, which are outperforming gold and the gold price. So it's very bullish here for the precious metal sector while this consolidation is taking place in gold. And you have silver continuing to show this relative strength. And more importantly, you take a look at the gold-silver ratio. That 80-to-1 level has been a level to watch for quite some time. And now it's trending below 80. I think it's around 70 right now. So you see that going down. That's very bullish for the sector because silver, once the gold price breaks out and takes off, then silver joins the party, and that's when you got a full-blown bull market in the precious metals.
All right. So in your expert opinion, and for gold anyway, we're heading into uncharted territory. Silver is still trading just around 2/3 of its all-time high. How high can these metals go?
Oh, well, I don't like to make broad forecasts, for the future that much. I mean, I'd be very happy with a $30 floor in the silver price, along with a $2,100 floor in the gold price, which we already have. But if you take a look at technically at the silver price, if we get that monthly close above $32 this Friday, there's not a lot of resistance until 34, 35. And I wouldn't be surprised to see that level seen visited rather quickly. We had a short squeeze going on in the copper market that has subsided, and now it's transferred into the silver market. If you take a look at Chinese demand, Chinese central bank demand, citizen demand, that's what's driving the market right now. I mean, if you take a look at the premiums in silver in Shanghai, they're at 12.5%, the premium for physical silver in Shanghai. And the gold premiums are at over 2%. So that's what's driving the market here, is Asian demand. And Indian physical demand has really picked up recently also. So, because gold reigns supreme in India. And when the gold price it has become too expensive, they start buying silver. And that's what's happening in India.
Poor man's gold. And we're coming up to the marrying season in India, the dowry season. And that's when things generally really have taken off in India in the past. So,
right. And there's also election going on there too right now. So
yes,
a lot of interesting things happening in India.
A lot of elections taking place all over the place, and leading to the general feeling of geopolitical instability. We got wars going on, not just the two wars that are announced, but other wars that are a little more stealthy. It seems like everyone in the world wants to kill each other.
Unfortunately, yes. That's the perfect storm for the precious metals here. Unfortunately, as far as the geopolitical situation concerned, that's keeping solid buying in both silver and gold now. Inflation is not waning. Taxes are rising. America's debt burden is off the charts now. It's the Pazzi scheme that is basically the Federal Reserve and the U.S. government is in full force now, with $1 trillion of debt being added every year now, and it's I think every 100 days.
Every 100 days, yeah.
Every 100 days, $1 trillion of debt is added, and there's no intention of paying any of it off. They're just continue gonna finance old debt with new debt, and the gold price has sniffed that out. The gold and silver both are breaking out in all currencies. That's what it took for the gold price to finally become into a bull market was for the gold price to break out in the U.S. dollar, which is the world's reserve currency still, and that's taking place. So, you've got wars going on. You've got the inflation situation, which is basically creating a stagflationary situation. That's what gold sniffed out. Also, You've got inflation higher than GDP growth. We got another GDP number coming out tomorrow, and then a PCE inflation statistic coming out on Friday. That's the Fed's preferred measure of inflation, and we know those aren't real inflation statistics anyway. Anybody who goes to the store and buys groceries or has to pay a bill knows that inflation is a lot higher than what they say it is. Unemployment is a lot higher than they say it is. I mean, a lot of these people are working 2-3 jobs, and a lot of these new jobs have been government jobs, and government jobs don't add anything to economic growth. So, I mean, all these things are starting to manifest themselves in the rising gold and silver prices.
No, I couldn't agree with you more about these government workers. That's kind of an oxymoron,
Exactly.
I mean, really, but hey, so the key is, with all this uncertainty, all of this craziness that's going on, opportunities get created, right?
Absolutely. Yeah. I mean, the stock market has kept going higher because of capital flows coming over from Europe, because things are much worse there. Just buy Dow blue chips, put your money there. And but the stock market appears to be starting to roll over here into crash season, which starts in August. I mean, the streets are littered with shorts trying to call a top in the stock market.
Yeah.
I mean, that's another thing keeping it higher is shorts get aggressive when they start to see it rolling over, and then they have to cover when positive economic data comes out, or when positive earnings comes out in a major Dow company or a major AI company. NVIDIA now, the entire market cap of NVIDIA, you could buy the entire Canadian stock market now, the market cap of NVIDIA. So just incredible how the AI bubble just continues to grow. But that's on the outside. That's the poster child is NVIDIA, but if you look underneath the hood, a lot of these other companies are starting to roll over. But, once we have a correction in the stock market, it's probably going to be just that, just a correction, a 15, 20% correction. And then it's probably going to start going back up again.
Well, that rates have to be cut.
Oh, they know it. They have to. Yeah. In a rising inflationary environment, that's the thing is gold is sniffing out. They're going to have to back off on that fantasy 2% target and lower rates. And once the market sees that, that's when the bull market really gets going. I mean, we're just in the early stages of this gold bull market.
Exactly.
You take a look at history. I've been in this sector for over 20 years, and when I started to get into it, it was $500. $500 gold was the magic number, right? $500 gold was unable to be vanquished. It created another cup and handle right below 500. And it was about a 13 year cup and handle below 500. And once we had that monthly close above 500, gold doubled within a couple of years. It got to $1,000 pretty quickly. So if you take a look at that happening again, then of course, gold breaking out from a 13-year cup and handle pattern below 2,000, a doubling would be $4,000. So I wouldn't be surprised to see gold at $4,000 within a year or so.
Me neither. And I have a couple of years on you. I started buying gold in '99 at $280 an ounce.
Wow.
I was always a gold bug from the time I was a kid.
Yeah, me too. I went through my father's change when I was a kid to find silver dimes.
Yeah.
Silver quarters. I still have them.
I remember, so this is 1965. My brother came into the kitchen and he had like a handful of silver quarters and he dropped them on the floor. And,
wow.
And that sound, that clang, that it's silver. And then he dropped the copper-clad ones, the new ones, and they sounded like you dropped the bottle cap on the floor.
Yeah,
garbage. I never knew that particular moment in life would have any effect over my future. But here I am, been here for 15 years espousing this sector. And let's face it, there's big difference between the metal and the stocks.
Oh,
big difference.
Yes, especially during this bull run. I mean, this is not your father's bull market.
No, but the point is that eventually, the stock should be leading the metal. It hasn't been the case now, but eventually it's going to happen because look, $30 gold, $32 silver, David. What does that do to the economics of every silver mine out there, including the byproduct?
They've been operating at a loss for so many years, but $25 all-in sustaining costs has been basically the level. And now that it's if once we have that floor at 30, most of these silver producers are going to be profitable now. And basically, what you really want to look at is that margin compression that held the stocks back for so long for the past 4 years, right? In Q1, you started to see it. In Q1, the gold price averaged just below $2,100 an ounce, and the silver price averaged, I think, around $23, $22 an ounce. And if you take a look at at Q2, we've got another month to go in Q2, but the gold price it looks like it's going to average over $2,300. That's almost $300, probably going to be around $300 higher than Q1. And these majors, these mining companies are going to be throwing off gobs of cash now, because what was happening before was we had margins were not increasing as high as the gold price, right? It was margins were trailing the gold price rise, but now margins are rising, are basically staying pretty much where they are, maybe rising a little bit while the gold price has taken off. So these companies are their Q2s are going to be phenomenal. I mean, when we had Q1 results several weeks ago, we had Newmont, which is the poster child for the gold mining sector, right? I mean, it's the only gold stock on the S&P 500. And it's also the world's largest producer by double, right? I mean, Agnico now is number 2, and they produce almost twice as much as Agnico. Yeah, Barrick's no longer number 2; it's now Agnico. So you have but you have Newmont's share price hit around $80 in early 2022, while the gold price was still around 2,000. Well, it got down to around its COVID lows around 30. Even though the gold price was even higher. So when you have the general, the general is basically Newmont. When you have the general showing all this weakness and remaining in a downtrend and underperforming gold so much, then, it basically sours people from the sector. But now recently you had Newmont have an off the charts quarter. That it was their first quarter after they gobbled up Newcrest. They had an off-the-charts quarter. The day they announced their results, the stock was up 12.5%. It was the largest gainer in the S&P 500 by far on that day, while the Dow and the S&P were getting their ass handed to them. So that put gold stocks on the radar, I think, for the general investor. And these funds now, if once Q2 comes out and we have another blowout quarter, and you're going to, I mean, like I said, the gold price is average over $2,300 here in Q2, unless, gold falls out of bed for some reason in the next month. It looks like it's going to average over 2,300 in Q2. These funds, these hedge funds, these fund managers, they no longer are going to be able to ignore this sector anymore. They're going to have to participate.
Right.
And when you see a flood of funds and big money coming into a small sector like this at once. I mean, if you take the entire mining sector, it's basically got the market cap of around Home Depot.
Yeah.
Of the entire sector, and these funds want to get in. I mean, it's got to be, the old Casey euphemism, I think it was, trying to put Niagara Falls through a garden hose. I love that euphemism. So that's basically what you're going to see when these fund managers have to get into the gold, especially if the stock market is starting to roll over at the same time this happens. So we're going to start to have Q2 results in I think late June. So that's what we're gearing up for. While the gold price is consolidating below that round number of 2,500, that's the number it was shooting for. It's got this, this double top that everybody's looking at right now at 2,450. So it's brought in some healthy profit taking into the mining sector because it did get it did go pretty far pretty fast. So we need some consolidation here. I mean, this is just the beginning. I mean, I know a lot of people are frustrated with a lot of their juniors not really performing, myself included. But, once this is the way it always happens. The majors move and the royalty companies move, then the mid-tiers move, and then the juniors move. And we've already seen some major moves in a lot of these juniors, but we haven't seen the sector really take off yet. I mean, there's still a lot of stragglers that have that. A lot of these juniors, they have great projects, but they've mismanaged capital markets, and they've ended up having to have too much dilution, so their upside is now lower than it was before. Say you accumulated a stock, last year ahead of this, and you were expecting the gold price to break out, and you were expecting the miners to take off and the juniors to take off with them, and you were accumulating these stocks and they had 10 times upside. But now with the dilution that these companies were forced to take at lower prices, your 10 baggers have now become 2 or 3 baggers maybe at your accumulation price, right?
Yep. Hey, so with Newmont, from 23 to recently to April, it made a perfect cup and handle.
Yeah, exactly. Yeah, you've got a nice cup and handle in there. I mean, it broke its downtrend.
Yeah,
and yeah, it's starting to lead now, and that's what you need to see. You need to see the leader lead, and
exactly.
But it needs to get above 45, 46. That's where Newmont gets. I think that's where that's when a lot more buying comes in once it gets above there.
Well, it probably won't be much longer. I mean, it should, earnings should do it because whatever.
Well, yeah. I mean, plus also you've seen in Q2, you've seen the oil price go lower.
Yeah.
So you've seen the oil price go lower and you've seen the gold price go exponentially higher. So you've got, the added $200-$300 to the gold price from the average, 2070, 2090 in Q1. And you've got the oil price has also gone down a couple bucks, because, with these miners, especially, Newmont, who've got these big open pit mines, oil could be 50, 60% of your cost.
Easy. It's the biggest single component of your cost structure. And then labor, which is just going higher. There's nothing you can do about that. And in the U.S., they're unionized as well. So,
yeah, they're all in sustaining costs around $1,500, I think, right around.
Right. Yeah. So basically, you should see a huge earnings spike in, I don't know, are the insiders buying Newmont at all?
I haven't noticed recently. I haven't checked that. But like I said, I mean,
surprise.
If you see a back-to-back blowout quarters in the major, which is in the general, which is Newmont, they can no longer poo-poo this sector anymore. And, they've pretty much ignored it because there really hasn't been any reason to get into it because of that margin compression while the stock market continues to go higher, AI continues to go higher, crypto continues to go higher. I mean, why should we mess with these gold stocks that have been underperformers for so long when we were making so much money in these other sectors? But like I said, they no longer ignore it once these Q2 reports come out.
All right. So here, I just popped up insider trades for Newmont.
Oh, okay.
In the past 3 months, there's been 12 open market buys and 1 sell. In the past 12 months, there's been 35 buys and 39 sells, which means that before this quarter, there were actually only 23 buys and 39 sells. So that's telling you everything you need to know there, that the insiders know what's coming. They bought 117,000 shares in the past 3 months. Oh, and the sale was for 935 shares. Basically, there were no insider sales on Newmont. Now, I'm not telling anyone to buy it or anything else but the old saying, there could be many reasons why an insider sells shares, but there's only one reason why they buy them, right?
Especially if they're buying in large blocks. Yeah. I mean, and sometimes, these juniors, you see these little tiny buys and it's just management trying to put lipstick on their pig.
Yeah. Well, their directors bought little amounts, but the officer, Peter Wexler, bought 71,000 shares. So I don't know if he was exercising. Oh, those are options. I can't spend the time right now to analyze the pattern, but open market buys, those are the ones we care about, obviously. Yes. Yeah. And those have been pretty vigorous. So interesting times here. David, just tell us how we subscribe to Junior Miner Junkie and why we should.
Okay. Yeah, you go to my website, Junior Miner Junkie with a Y.com. And I'm completely transparent with my trades, with my investing, and I teach investors how to accumulate positions and how to also basically what my service offers is it's basically a nonstop shop for the precious metals sector. I give you in each weekly update, I give you a macro picture of what's happening, and I do a little commentary, and I also cover all the stocks that I own and that I recommend to subscribers. And I also have a watch list of 20 more that I cover, and the top news stories of the week. And I break down technically what's going on with each stock each week, and what I feel is what important events have happened recently in the sector during that week. So, and like I said, completely transparent. All the trades that I make, that I buy, that I sell, the money that I made, the money that I lost, everything is basically all the information is there. each week updated for my subscribers to see. So they see my mistakes. So they learn from my mistakes as well as I do. And before I invest in a company, I write up a full detailed report of the company, and I send it out to my subscribers, and I say, hey, this is a company I'm going to start buying. So we all try to get into it at the same time. So basically, we're all in it together in my service. I mean, that's the only way to do it, because my big reason for investing in a stock, in a junior, is I want to see the management with skin in the game. I want to see them participating. I want to see them putting their hard-earned money into the stock. So, if that's basically my number one rule before I get into a stock, is I want to see management participating in finances. I want to see management holding shares. Then why not run my business that way? All the companies that I recommend, I'm into, and I have large positions. It's a very high net worth portfolio. So it's basically a trading service. So if you want to learn how to accumulate juniors and how to take responsibility of basically your trading and your risk management, I teach all that in my service.
All right. Excellent. Well, hey, it's always a pleasure having you on. If you got any questions for David or myself, shoot me an email, kl@kerrylutz.com. Link in the show notes to this interview on financialsurvivalnetwork.com to David's site. So please visit us. And while you're there, sign up for your free newsletter. David, we're getting into exciting and very interesting times here. Hopefully we'll all come out the other side with more than we started.
Thanks, Kerry. Thanks a lot for having me on.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.